Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, the Chief Currency Analyst here at HYCM. Just as we're joining in, I'm just going to say hello to folks as they're coming. Hi again, Aaron, Alexander, Diep, good to have you back. Nisa, Piers, Ravi, Sammy, Van, good to have you guys. Yao, that's great. We've got a lot of good things to look at this workshop. There's some interesting things happening in the market, particularly Brexit related, which isn't a great surprise. And we've also got a good special topic to look at about how to trade expected interest rate hikes or rises. And I'll go through a work example that I took recently on the Norwegian bank. So we've got some good things to look at. Just doing the usual. Yeah, hi Sammy, hi Diep. Well done, guys. You've got some questions typed in nice and quickly. Yeah, appreciate that. So I know you can hear me all right. That's super. Just to make it clear, as I always make it clear, and it's important that I do, and all the things that we're discussing during this time in the market is purely for education. So what I'm not doing here is I'm not giving market signals out. The idea of this is not that I'm providing a market signal service or trade recommendations. The whole point of this workshop is all about education. It's all about helping you guys to make your own decisions, so you don't need someone like me. So you can eventually, over time, you can begin to make your own decisions in the market, and you can know why you're making them, the reasons you're making them, and basically to have confidence in your trading. So I will be talking about different setups, different stops, take profits, and you have to be aware that this is all for education, and I'm certainly not taking all the trades that I'm mentioning. Often they're just good illustrations of the kind of things you'd look at and the kind of things you do. So just wanted to make that clear so that you know that's really obvious for you guys. Okay. So as we get going, first of all, let's look at an outline of the session ahead. And what we see in the coming up session, if you go to the webinar control panel on the right-hand side, you'll see a handout section. Now that handout section, if you click it, you will see a workshop guide, okay? It says workshop guide 26th of March. Oh, no, it's not that one, that's the trade terminal. Sorry about that. This is the correct one. This is the workshop guide. And the whole idea of this workshop guide is this is a reminder of all the things that I'm doing in the market on a day-to-day basis. Okay, I'm constantly doing these things. I'm looking back, I'm looking forward, I'm looking at the charts, I'm looking at my risk, and I'm looking at the outcome of my trade, and I'm doing this over and over again. So I've tried to consolidate into one piece of A4, a simple sheet that you print out, you have by the side of your desk, and you go through this sheet over and over again. So each time when you come to your desk, whether you're looking to trade once a week, once a month, once a day, or once a session, each time it's exactly the same principles that you use, and I've done this handout for you guys. So make sure you have that, and if you're just new to this workshop, make sure you printed that out and you've got a copy of that for yourself, and also remember that you can just look at that as we go along as well. A special topic today is trading into expected interest rate decisions. I'm looking forward to explaining this to you. There's an opportunity that you can get each time an expected interest rate decision is coming up. So whether you're expecting an interest rate rise or interest rate cut, there's a certain strategy that I'm going to share with you that can be very helpful into how to profit from those expected interest rate decisions. The handout for session that you should already have. And also mention, if you've got any suggestions for topics, just email me here at giles.coughlin@hycm.com. And this is particularly, each workshop, each Tuesday, I like to have an extra special topic, something a bit different. So if there's something you want to understand or you don't quite get, then please email me. Otherwise, I'll just keep choosing topics which I think will be helpful or particularly relevant at the time for you guys to do. So without further ado, turn to your handout, and we're going to use this handout as a kind of pattern. It's kind of like, okay, this is how we do it, and we're going to start by looking back. And if you look at your handout, you will see under the look back section, you've got 3 different bullet points. Now, the bullet points are this: identify recent sentiment by reading up on the last 2 sessions of market activity, identify key market sentiment, and then try to summarize that sentiment in a sentence or 2. For those of you who just joined and not aware of what sentiment is simply the mood of the market. So think of the market like a person. People have different moods. Sometimes people can be grumpy, sometimes people can be sad, and if you have a family member, you can read the family. You can see a family member quite easily. You can sense their mood. So yeah, just interesting. Got a little headline on the DUP say it's prepared for a long extension to the Brexit process. So that's quite an interesting little headline there that's coming out. And we're seeing the pound just slightly rising on that because the DUP are very much in focus at the moment with the Brexit scenario. We'll just see that, just looking for some upside in the pound now as we speak. I'm not sure quite what they mean when they're saying they're prepared for a long extension to the Brexit process, seeing a little bit of upside to the pound. So I think that seems that they're not necessarily. We'll see how that goes. Interesting. You'll see how that's relevant, guys, during the session, because we are really focusing very much on what the DUP are doing at the moment in the Brexit process. So a lot of excitement to come there, and that'll be obvious as we get through the workshop. And of course, I will keep you updated with anything relevant. And the pound's selling off a bit now. Yeah, I thought that was quite bearish news. Okay, lovely. So without further ado, we're going to start by looking back, and we identify recent sentiment by reading up on the last 2 sessions of the market activity. Now, it's always key. You know, a lot of mistakes that beginner traders make, they just jump into the market, flip on their laptop, and they look at the charts. Is the price at this level? Is the price at support level? And they just start trading. Now, as a professional trader, that process is doomed to failure because you need to understand the mood of the market to understand what the bias of the market is. You know, where is the market thinking of going? What's the market thinking of doing? So we're going to start by looking back and reading up on the last 2 sessions of the sentiment. Now, okay, in the Asian session last night, there was some big news, and the UK government was defeated on its Brexit vote by a majority of 27. Now, this defeat for the UK government was on what's called the Letwin Amendment. And that means on Wednesday, 27th of March, MPs will now vote on a series of options to establish what could command a majority in Parliament. In essence, the British Parliament have said that we are losing confidence in Theresa May, and that because we're losing confidence in Theresa May, we're going to try to take control of the negotiations. Now, it's not binding, the Letwin Amendment, so Parliament can't just okay, yeah, big news. DUP is ready for a long extension to a Brexit process of a year or more, which would involve new UK Prime Minister and different approach. So very interesting news coming out from the DUP. They are very much in focus. Okay, and seeing the pound just selling off a little bit, 1.32333. We're seeing some more downside in the pound. And yes, 1.3231 now, and taking out challenging recent lows at 1.3229. Yeah, just getting some selling there on the pound. So very interesting Brexit developments coming up all the time here. Yeah, now down a bit further. Just put a tentative sell in there, just a quick little sell. Yeah, 1.3225. You can look at your screens. If you turn to your pound chart, you'll see, I just took a few points. I'll leave that there because I'm a bit distracted on the webinar. But just have a look here. You can see this is a really good learning point for you guys, because what you'll see is that the price chart is responding to the news, okay? And what was happening as this negative news has been coming out from the DUP, you can see that price is selling off. And all this, you know, this price selling off has all been to do with the news that's coming in. Let's have a look. Right. So if you can see there on the chart, that was the news when the DUP said they were prepared for a long extension, and then price sold off. You see how price has sold off from that news. It's sold off 1.3239, nearly 10 points, and just challenging underneath that 100 exponential moving average. So that was just a, you know, I just took a quick little spike on that, because some of these news things can really be good opportunities. And that wasn't necessarily such a great opportunity, but it's a really good learning point to see, look, you know, the price sold off. So the DUP is very much in focus. That's the headline I'm looking at the moment. I want to see what the DUP are doing. Are they supporting the deal? Are they rejecting the deal? That's going to be key to what goes on ahead. So, okay. So this is what happened last night. UK, the Brexit vote majority, they lost, and the options now come down. This is how the breakdown was. Okay. MPs voted to take control of Brexit process. 329 MPs voted yes, and against the amendment was 302. So you can see that the split, it was the Labour Conservative split. But even though there were 30 Conservatives that voted to take control of the Brexit process, so UK government is in a real mess at the moment. And this is what that latest vote just explains. The UK government has got so annoyed with the process that they're wanting to take control and take it out of Theresa May's control. Okay, that's essentially what's going on here. So these are the options. So the vote will be on Wednesday, so that's tomorrow, so look out for this. And these are the different options that there are. Okay, the first option is for Theresa May's deal. Now this has been rejected twice, and it's opposed by the DUP and the ERG group. Now this is why the DUP are in such focus, because they could potentially turn their support and give enough support to Theresa May's deal to get it through. So that's why the big focus of the market is on the DUP and the ERG. What are they saying? Are they maintaining support of May's deal? Are they, you know, saying we're not going to support May's deal, or do they change? So the latest news just out now, it was just simply saying the DUP are prepared for a long extension of a year or more, which could involve a new UK Prime Minister and a different approach. And I'll show you here just on the news feed. I'll just show that to you how that's looked. So that's just, you can see this has just come in the last few minutes. And there's a quick screenshot for you guys to see that there it is, just going Brexit DUP ready for long extension to Brexit's process of a year or more, which could involve new UK Prime Minister and different approach. Okay, so that has just come in. And the DUP, a big focus. So for you guys, if you're trading the pound at the moment, you see a headline about the DUP or the ERG, that is what you want to be focused on. If you don't have access to a paid news feed, one of the good service that I can recommend is forexlive.com. You can access that website here. I'll just give you an example. So I'll just put down the web address. So here it is, forexlive.com. And I write daily for these guys, and you see that. You just see there how good that is. Like there it is. DUP says prepared for a long extension. Now that was at 1:07, okay, and that news came out around the same time. So that's a delay of about a minute for you guys. So if you go to forexlive.com, and I will put this link into your what I'll do is I'll put this link into your. Oh, hang on. I'm trying to put it onto the site for you guys. For some reason, it's not letting me. Hang on. Let me try again. Let me see. Right. Oh, here we go. Managed to do it. So I've managed to send to everyone the forexlive.com website, and that will give you good access to news if you don't have access to a live news feed. Very helpful, very useful for you. Okay. Option number 2 is a no-deal Brexit. That would obviously be seen as a very bad result for the pound. and you'll be looking at the pound going down to about you look at the pound will be going down to about 1.2. So if there's a no-deal Brexit, you can expect these lows to be tested and probably beyond. Okay, so a no-deal Brexit will probably go down here 1.12 in a jiffy, and then possibly breaking more lows than that. Okay, so that would be a no-deal Brexit. If Theresa May deal is accepted, then we can look at a break of these highs and up to 1.3550, 1.3600. Okay. Okay, the other option is to get rid of the backstop arrangement. That is what has been the big sticking point in Brexit negotiations. So if that is gone and that's gotten rid of, that will be a really a bullish outlook for the pound. We've got Canada Plus deal. That's popular with hard exit Brexiteers. That is a deal that really focuses on the trade agreement between the UK and the EU. And it's not really to do with a relationship with the EU. So hard Brexiteers like that option. You've also got the Norway Plus deal. Now, the Norway Plus deal is seen as, oh, hang on, guys. Let me just see. Let me just check I've got your. Oh, yeah. So I just momentarily lost the panel. And I was just checking you're still with me. Yeah, you're still with me. That's great. Yeah, okay. The Norway Plus deal is seen as a soft exit. So this is something that would be very bullish for the pound. And the UK would remain in the single market. And by staying in the European Economic Union and the European financial sector, UK would remain in that customs union. So the Norway Plus deal is a soft Brexit option that would be bullish for the pound. The next deal would be a Labour deal, and the Labour deal is just basically seen as basically staying as it is. European Council President Tusk says this has been promising, but UK Parliament rejected this deal and very unlikely to be accepted by the UK Conservatives, because at the moment there is a Conservative majority just about with the DUP. So Labour were unlikely to get their deal through the government. The other option is the second referendum, and that puts the ultimate choice back to the UK people. Now, that is a very interesting development. If there was speak of a second referendum, we're likely to see the pound appreciate considerably. Okay, so you need to be aware of these kind of options. Now, this is what's the situation at the moment. Britain voted to leave the European Union. Now, at the time, I think a lot of people really misunderstood what this vote was about. I think a lot of people, maybe from outside the UK, thought that this was UK citizens voting to leave the European Union. Actually, being within the UK, my opinion is that it was really a vote against the ruling classes in the UK. It was a chance for those people who weren't in power, feeling disenfranchised. Remember, quite a few years after we've had the big recession, global recession of 2008, lots of cuts, people really struggling. And this was an opportunity for people to sort of do something that changed what the status quo, because those in power wanted us to remain in the EU, and a lot of people felt disenfranchised and they voted to leave. Obviously, not everyone did it for that reason, but I think that was the general rule. But people within UK it's not like people hate Europeans or anything like that. And I think people generally quite like Europe. So with all the hassle that Brexit has been, this was a poll done recently. Look, this is the poll from January, ever since May 2018. So for nearly over a year, if there was a second referendum, do Britain still want to leave the EU? Over 50% want to remain. So be aware, if a decision comes out, there's a second referendum for Britain, obviously that question is going to be key, but it's going to be bullish for the pound, okay? Because if Britain remains within the European Union, you haven't got all this stress and all the controversy over how the trade arrangements are, what tariffs will there be, etc., etc. So a second referendum is a possibility. So look out for that vote coming tomorrow, it's going to be potentially quite influential. Just wanted to let you know how troubled this is for the UK government. There's a lot of risk that's involved here. If you look at, you got Theresa, if you look at the resignations that have come in for the UK government, with Theresa May being in charge, there has been over nearly 30 ministerial resignations. Okay, now look at the different Conservative prime ministers over the number of years. So Theresa May, in just over her 2 years of being prime minister, has had more government resignations than Tony Blair did in 10 years. Okay, so what that shows you is that this is very troubled times. So in other words, there's a lot of risk for the pound. There's a lot of risk at the pound, and you know, we're going to look at the pounds now. I'm going to look at some relevant levels, because I think this week is likely to have some kind of deal sorted. Okay, I think we could be seeing a deal either being sorted this week or being well on the way to being sorted. It's an important week, notwithstanding what the DUP have just said, that there's a long extension to Brexit of a year or more, which they're looking at. So, but notwithstanding that, it's a very important week. So let's look at the pound. Let's look at it technically. Okay. Now, if you're looking at the technicals, I like to use the 100 and the 200 and the 50 exponential moving average. You can see why they form good reference points in the market. The 200 and the 100 moving average are very respected moving averages that a lot of people, a lot of analysts refer to. So I like to use it for that reason. Now, if we look at where price is at the moment, we see that price is just around this level that we're at now. It's the 1.3200 level, and price has just tried to break above the 100 exponential moving average, and just around, is almost exactly on the 100 exponential moving average. So if like a deal does get done, then what we'll see is we'll see an immediate return to 1.36. Okay, so immediate target would be that 1.36 level. So if you just around, you're looking at the and you suddenly see, you know, the deal is sorted, you can just jump into the pound and then take profit at 1.3600, and then you can get back in on a retrace if there is one. If you hold through that moving average, the next target would be about the 1.40. These highs up here would be another logical target to take. So just to be aware of that kind of price dynamic that's going on. Now, if there was, you know, a no-deal Brexit occurs, then obviously the converse is true. You know, you can just put a stop above here, above these highs, above the 100 exponential moving average, and price will plummet down to 1.20. So there is a potential opportunity here. So be switched on and alert to those kind of movements that might be taking place. And if we look as well at the pivot points, we'll see as well, this is the weekly chart. We can see that we're in a really key place here. See that pivot point here? Now, if you notice, we're just underneath that pivot point. So if you know, it becomes clear that there's not going to be any deal, there's not going to be any arrangement, then that pivot point can be an obvious place to put your stop. Okay, and then you can play it down to the support levels. That first target would be the obvious target. Those swing lows on the weekly chart would be an obvious first target for you guys. Okay, so pound very much in focus. It has been for a while, so I suggest you keep it in focus as well. So be aware, but also be aware of there's distinct risks with the pound. It's not one-way traffic. Okay, now in the Asian session, we have Bank of Japan summary opinions that came out overnight. And the Bank of Japan reiterated that it would take time to achieve 2% inflation target. They have been trying to get 2% inflation target for years and years and years and are still failing. They said that Japan's economy expanded moderately, Private consumption likely to follow uptrend. Downside risks for Japan's economy is increasing. And there was room to review Bank of Japan's bond buying program. Now that is the interesting takeaway there. Now the bond buying program is the quantitative easing. Whenever a country undertakes quantitative easing, it means the value of the currency depreciates. Okay, so the 2013 quantitative easing program of the Bank of Japan saw the Japanese yen depreciate considerably against the US dollar. So if the Bank of Japan say we're going to renew a quantitative easing program or increase it and really go for another attack at quantitative easing, then we're going to see the Japanese yen lose value against the US dollar pair. So that would be a US dollar Japanese yen buy. So nothing here at the moment, nothing, no news, but they're just saying this. There's room to review it. So be aware that they're thinking that they could be reviewing that bond buying program. Also, another interesting thing out of Japan last night was the man instrumental in Abenomics, this kind of quantitative easing program, Yamamoto. He said there's not much more that the Bank of Japan can do to support the economy. He suggests that the Bank of Japan made a mistake in 2016 when it switched to interest rate targeting instead of the pace of money printing. So interesting that this man is saying that actually he was key to Abenomics, said, well, maybe we made a mistake when we switched to interest rate targeting instead of the pace of money printing. This is the quantitative easing program. So look, take those together. You've got the Bank of Japan saying we're willing to review the bond buying program. You've got Yamamoto saying maybe we made a mistake. That is setting up for a potential return to quantitative easing. Now, we have to remember we're at a massive crossroads in the financial markets at the moment. There's so many things going on. You've got US-China trade deal still not sorted. You've got Brexit. You've got problems out of Italy. You have Eurozone slowdown, particularly German PMIs. You've got the Brexit process itself. So there is a lot of risk, and a lot of economies are very vulnerable to this risk. So if that risk increases, then we know that the Bank of Japan would probably quite happily go back to their quantitative easing program, which would result in a Japanese yen weakening. Okay, so just to be aware of that dynamic as well. The Federal Reserve, Rosengren, he votes and he's a hawk. He said Q1 growth likely to be pretty weak out of the US. This came out overnight. Next 3 quarters likely to be between 2 to 2.5% growth. Fed pausing was the responsible thing to do. China and Europe are risks to growth forecasts. So that was both Rosengren. He says dot policy is not a promise of policy direction. So remember, it was last week the Federal Reserve changed their dot plot, and they basically ruled out an increase of rate hikes for 2019. They said, not going to happen. But here he's saying dot policy is not a promise of policy direction. And there has been some kind of concern over the dot plot. I know that the Federal Reserve, Jerome Powell, was sort of said, it hasn't really worked the way we wanted it to work. There was a sense that the dot policy doesn't necessarily provide exactly what they wanted to give the market. And this is just Rosengren saying that dot policy is not a promise of policy direction. However, the market does respond to it considerably. So you got to bear that in mind and see the Fed's reaction to the dot policy. Why they have it exactly, I'm not quite sure. They seem uncertain themselves. We had some news from the Reserve Bank of Australia. We had RBA's Assistant Governor Ellis. Now, as you've been following me, you will know that the Australian economy is really focused on the labour market developments. Okay, now this is something that's fundamental for trading. Find out what a central bank is focused on, because you then know which data is going to really move the market. When a central bank says, "Oh, I'm really focused on jobs growth," or "I'm really focused on GDP growth," or "we're concerned about this marker or indicator," then when that data point comes up, it's going to be widely followed and it's going to have a big reaction. This is a perfect example, really good learning point. Like the Reserve Bank of Australia, they've said already at their last rate statement, they said, we're watching the labour market closely. They take a lot of confidence in the labour market, saying that although some indicators were softer for Australia because the labour market was strong, they're holding on to a more upbeat tone on that one data point, the labour market. So if the labour market starts to deteriorate, what will we expect the Australian dollar to do? This is just to make sure you've got it. So say, for example, we get some labour data that comes out and it's a really weak reading. What will we expect the Australian dollar to do? If you could type that in the question, guys, that would be really helpful. So here's the question again. If we get some weak labour market data out of Australia, what will the Australian dollar do? Will it be bought or will it be sold? If you could just type it in, yeah, Nadir, Chubivan, excellent, very good. It'll be sold. That's exactly why. And usually be sold. It's the sort of trade you want to get into because you know there's going to be some follow through. There's going to be some continuation because we know that central bank is focused on it. And for those of you who are new here, you know, the Forex market is driven by central bank policy. That's why we go through all this data. That's why we trawl through the central bank policy, because that is what drives the markets. Okay, so here's the saying, labour market is unambiguously improved, reasonably confident in the strength of labour market data. Strength is shown in multiple independently collected data sets. So some of the drags on income not likely to be permanent. So quite an upbeat tone from the RBA's assistant. Okay, so that's worth noting. He says RBA does not move in lockstep with other central banks on rates, e.g. doesn't move forward. Yeah, just more Brexit headlines coming out. RBA, they don't move in tandem with the Federal Reserve. That's what they mean. Now, in a sense, it's not true, because what the Federal Reserve do affects all central banks, and all central banks are actually following the Federal Reserve. However, what the governor, assistant governor, is essentially saying, it's not, you know, they don't move in lockstep. So because the Federal Reserve has done one thing doesn't mean the RBA is instantly going to do something that next minute. Okay, that's all saying. So we'll take fiscal policy into account when setting rates. Now, there is a election coming up, and as a result of the election, there's going to be some tax cuts in Australia. So just be aware that you know, she's got to make some room for tax cuts that are coming. Okay, key takeaway is that labour data is still closely viewed by the RBA. So of course, we want to know when's the next labour data coming out, because that's what's going to help us for our trading. Okay. Yeah, DUP just saying that their position is unchanged. That's what they're saying. They just come out. DUP responding to report, party ready for long extension. DUP spokesman says our position remains unchanged and as previously set out. So in other words, the DUP are not budging on their position, and that is what some people were hoping. They would hope that the DUP would budge, and so that is not the kind of news that people were thinking. They wanted to see the pound, you know, really appreciate. And you can just see, I'll just show you this, guys. This is a really good day for headlines, and it's a really good example. Like that new data has just come out, and you can see that the pound is sort of very mildly selling off here. Okay, just see that sell-off that's happening as we speak. And you can see that, you know, that might carry on down for a few more points. I'll just show you the headline. And there you go. So that's the tweet just out. Responding to, you know, DUP spokesman says our position remains unchanged and as previously set out. And you can see there was a 1.32, you know, about a 10-point move down just on that headline. Okay, guys. You know, I think that's really helpful for you to see. I really think that's really helpful for you to see. This is the benefit of having the news feeds coming in, because you can see where the market is moving. Okay. And again, just like the RBA, the market is focused on what the DUP are saying. They're focused on what the DUP are doing. That is the focus. Okay. And that is what is moving the market at the moment. Okay, that's good. Let's just move that down, get that out of the way. And here we go, back to business. So we're looking at the RBA again, and we're looking when the next labour data is due out. So let's have a look. The next, okay, so data we've got coming out for the RBA. We've got the rate statement. That's going to be a key thing on Tuesday, April the 2nd. And parliamentary elections, again, are going to be key. So they're key things to look for the Australian dollar. But we also have here employment change Thursday, April 18th. So if it still continues to be the case that labour data is still closely viewed by the RBA, then in that case, Thursday, April the 18th is key data that we want to be looking at. So there's different ways you can trade this. So say the forecast is a really good number, then you know that the Australian dollar is going to be bought into the event. So you can buy into the event. Say it's forecast to be really a bad number, then you know that the Australian dollar is going to be sold into the event. So you can sell the Australian dollar into the event. Okay, that is how you handle, and that's how you deal with that situation. Very good, very good. Just to show you there, the pound's still just moving down still. And is this helpful for you to see, guys? I hope this is helpful. You can see how the pound is responding to this headline as it comes out. Yeah, okay, thanks, Chib. That's good to know. I didn't want to be boring you guys, but you can just see, look, this is, you know, the market responds to the data, and all the time, you know, there's new news coming out, and the market keeps responding to it. You can see the pound is selling off further to the downside. We're now testing the 100 exponential moving average on the 5-minute chart. And if you go out a little bit, you can see, you know, price technically, okay, tosses that top line, and then the obvious target would be, let's see here. So an obvious target would be these moving averages here, and then a retest down would be a first target there, and that also coincides with these lows here. Okay, so that's the sort of thing you'd be looking at if you're getting into that trade. Although those kind of headlines are very, you know, when it's a headline like that, you just want to quickly take your money and get out. You know, 5-10 points, just take it and see it as a little bonus. Okay, there we go. Going forward, Asian equity markets, now they picked up from the big previous day's losses. Now, basically, remember, on Friday was a really bad day last week because the PMI data came out of Germany, and it was really bad. It was like 44 versus like 48 expected, and the euro sold off, and then the US dollar was bought because on a risk-off market, the market got really spooked. Okay, and yields really plummeted. There was an inversion of the US inversion of the US yield curve. You know, really gloom and doom. And we've slowly been picking up. So Monday was a consolidation day, and overnight the Nikkei finished up plus 1.9% overnight. Now, previously it had been down minus 3% on the Monday. So there's a bit of a pickup. So we've gone from being in a really risk-off market to being in a gently risk-on market, okay? Risk has improved a little bit, but there are so many difficulties in the market at the moment. That mood is just going to switch and sway. Fed's Harker came out in the European session. He's not a voting member, but he repeats that he's in wait-and-see mode. That's what we know that the Federal Reserve is in. We also have ECB's Rain. He came out, said that the euro area slowdown seems more durable than short term, and the ECB does not want to raise rates prematurely. So that's quite bearish for the euro. Okay, we're seeing more downside in the pound now as we speak. Really, understandably, why it's bad. That, you know, that DUP is really in the focus. Pound still selling off as we speak. Yeah, just to reiterate this point, that German PMI data, the fact that the German PMI data has been come out soft, the ECB is saying that that's not one-off. Okay, he's thinking this could be a longer-term issue, so something to be aware of and to acknowledge. Right, now Brexit movements in the European session saw some gains in the pound. Okay, now I took a quick long in the pound in the European session and just quickly made some money on the positive news that was coming out. And this was the positive news that came out in the European session. It was that ERG sources suggested that Ian Duncan Smith is softening to the deal. Now, he is a hard Brexiteer. So if he softens the deal, it's seen as good news for getting Theresa May's deal through, good news for the pound. The expectations when Theresa May addresses the 1922 committee tomorrow, I think she addresses them at 5 o'clock, is that she's going to set a date for her resignation. And that was seen as good news because the idea was that Theresa May would give a deal and say, look, if you vote for my deal, I will leave. Okay. And that was seen as a good thing for the Conservative ERG members and potentially DUP. So she's setting a date, potentially setting a date for a resignation. Whether that happened or not, we still don't know. But that's what was reported. We had the UK PM May reportedly had talks with DUP last night. DUP hates the present deal and unlikely to vote for it. So that was kind of the optimistic side of the market said, okay, PMA had talked to the DUP. So there was anticipation, oh, she's been talking. Maybe they're going to have arranged something. What we've just found out as we've been live on this workshop is the DUP are still in the situation they were in. They still hate the present deal and they're still unlikely to vote for it. Okay, so we're getting that. That is what came out in the European session. So if we look at the pound in the European session, okay, this is, you see here, right? You see here, this trend line was rejected, and this good news came in around on this candle here. That's the candle I got in and played a quick long up into those overhead resistance levels. I didn't want to take it any further than that and took my profit. Thank you very much. And now we can see price selling off that top trend line. But the catalyst for that sell-off is the DUP news. Okay, so now looking at the equity markets, we saw like the equity markets have picked up. So across Europe, it's all in the green. The Nikkei was up 2%, Hang Seng up 0.5%, Shanghai still down, but the European equity markets this morning were all in the green. Okay, not massive. Remember what I've told you guys, 1% is significant. Anything below 1% is not so significant. So it's gentler increases, but increases nonetheless. In terms of the strongest and the weakest currency, what we had is we had the pound was the strongest currency, and we had the yen as the weaker currency. So the pound in the early European session was up on reports that hard Brexiteers are softening. That's what supported the pound. And as I put, this is what I was saying, the whole thing, watch the DUP. They really hold a lot of influence. Watch what they say, watch what they do. That is going to be a big catalyst for the pound, okay? The headline to look for is the DUP agreeing to back Theresa May's deal. That will see a strong bid in the pound, okay? That is the headline that people are waiting for. DUP to back Theresa May's deal. The Japanese yen, now that was sold on US Treasury yields recovering and stocks picking up. So remember, when the market is fearful, it buys three currencies. Some of you guys tell me, which three major currencies does the market buy when it's scared? This is a question for you guys again. Give me the answer. Give me the answer, guys. There's three key currencies it buys. This is the risk off currencies. Trip, excellent, excellent. And there's one more. Now, good effort, Nadir, but it's not that currency. The three currencies that are bought when the market is scared is the Japanese yen, the Swiss franc, and the US dollar. Now, this is often one that can be misunderstood because the US dollar can be bought for different reasons. But sometimes when the market is scared, it will also buy the US dollar because obviously it's a strong currency. Okay, so they're the kind of risk-off currencies: yen, Swiss franc, US dollar. Now, the currencies that are bought when it's a risk-on market, and this will help you, Nadir, is what's called the commodity currencies. And the commodity currencies, Australian dollar, New Zealand dollar, Canadian dollar. Okay, so it's particularly the high beta currencies like New Zealand dollar and Australian dollar that are bought in a risk-on market. Now, also another little learning point for you guys. There was a large option expiry at the US dollar Japanese yen pair. Now, option expiries are valid till about 2 o'clock GMT time. You get the expiry levels in the start of the European session, and these levels act as key lines in the sand. You get big fights, big battles at these levels. And here, any option expiry worth more than $1 billion is very significant. So there was a big option expiry this morning, US dollar Japanese yen pair. It was at 110.10 to 110.15. So what you're looking at these levels, they tend to be defended. There isn't there isn't a science to this. And what you're looking at is the price action around these levels. So if you look at the dollar yen pair, let's have a look. Here we go. So remember the expiry level was about 110. Okay. So we'll go down to the 15-minute chart, which I like for intraday trading. Look at the 15-minute chart. And if we draw in that 110, 115 level, we'll see 110. So there's 115. $110 level. Okay, so there's a big option expiry there. So this morning, came to my desk, and what you can see is here at around this level 615, you knew that there was a big option expiry here. Okay, and you can see that price has rallied away from this level very strongly. Okay, so partly this has been aided by a couple of things. It's been aided by a risk on sentiment, so the Japanese yen is being sold off, and it's been aided by these option expiry levels. So that was an opportunity to put two things together. There's also another option expiry level, and you can, what I'm going to try and do, guys, I'm going to try and be posting these on my Twitter feed. Okay, so each day I'm going to try and post these on my Twitter feed, try and get into the habit of doing it. So if you go to my Twitter feed here, I'll just put it here. My name is Giles Coughlin. So Giles Coughlin, you can search me up on Twitter, and here, I give these tweets. And what I'll try and do is I'll try and put up on the Twitter feed some of the option expiry levels. Now, see, I put this up yesterday. Notable expiries of 1.6 billion on the pound US dollar pair at 1.3200 for today's New York cut. Look out for price action around this level. So if you go to my Twitter feed, follow me, I can try to let you guys know of some of the real big options that are in play, and that just keeps you guys informed, okay, and keeps you guys in the know, so you won't get caught out by these levels, because they're significant. The market, you know, when you see these levels, the market response, it reacts to them. Don't be caught out by not being aware of them. Now, where are we on my thing? Yeah, okay. Yeah, that was just showing as well. Look, there was a resistance point, pivot point. Price just literally cut through that pivot point and has now made its way up to the second pivot point. Okay, so you could have traded it using a pivot point to define, limit your risk, your targets. As you know, some of you regular guys know. Another large option expiry at 0.71450 to 0.71550. Okay, 1 billion option expiry level. So have a look at that. You can check that out to see how that responds on the Australian US dollar pair. But now it's not relevant now because it's expiring in a couple of minutes. So these expiry levels are only valid till 2 o'clock or 1 o'clock GMT time. So it's really something for the European morning session. Okay. Gold was down on the improved risk sentiment. Crude was up because obviously in a risk-on environment, you get crude being bought as well. Because obviously, like if global sentiment is good, if things are good in the country, good in the world, then more oil is going to be used, right? And if things are bad, things are grim, then less oil is going to be used. So crude responds to that risk sentiment in that way. 10-year yields up 2.4%, so that's looking good for risk. Looking forward, let's see what we've got coming up. Today we got some consumer confidence coming out of the US. We've got some housing data, housing starts out. We also have Draghi speaking tomorrow, and we got a rate statement overnight tonight. Okay, 1 a.m. GMT time. But that's a big event. Good opportunities there. You can look at the webinar that I did for the FX week ahead. Yeah, gold is a safe haven. Yes, that's right, Sammy. Gold is a safe haven. And so, Sammy, at the moment, like if, for example, Brexit happens, or the US-China trade deal goes really wrong, or Italy falls out the Eurozone, then gold's going to be bought. So, if there's a no-deal Brexit, you're going to see the pound plummet, and you're going to see the gold soar, particularly gold against the British pound. Okay, so you can look back and look at a GBP /XAU gold pound chart, and you'll see the huge reaction in gold against the pounds when there was the Brexit referendum. Gold is a safe haven, but remember, it's only a safe haven when it's the most attractive asset. Remember, you don't get any, there's no interest rate, you don't get anything from gold other than the value of the gold. So it's the ultimate safe haven when everything else is, when nothing else looks safe. Just be aware of that, Sammy, okay? Looking at the chart. So if we look at the charts, this is the key bit. Develop a bias for certain currencies based on your sentiment analysis. How does that sentiment marry with the fundamental outlook of a currency? Pair up weak and strong currencies and write them down. Look for key technical levels to enter. Place your orders. So based on what we're looking at today, we can see that during the course of this workshop, a bias for one currency has changed. Okay, so going into this workshop, I had a bias to buy the pound. But coming out of this workshop, my bias has switched towards buying the pound, and I'm more neutral selling the pound. Okay, what you're looking to do is always pair up weak and strong currencies and write them down, and then you look for your key technical places to enter. This is why you never come to the market and just flip open a chart. You always do your analysis. Which currency is going to be bid, which currency is going to be sold, and then you pair them against a currency doing the opposite thing. That's the thing to do, and just do it over and over again, okay? That's the key to it. Headline risk at the moment, the market is in a really difficult place. So the only trade that I'm personally looking at is the Euro NOK short. That's because the euro was very weak on those German PMIs, and the Norwegian kroner has been bid on a more optimistic outlook from the central bank. So I'm not going to put you through developing a certain currency bias today, because things are really moving. But that's something that you want to do on your own. Try to pair up weak and strong currencies, write them down, get the reasons. Okay, that is really what you want to do. Obviously look at your risk. You must always look at your risk. I advocate not leveraging. So what I advocate is you only use your trade size to match your account size. So in other words, if you have 10,000 US dollars in your account, I recommend that you only trade with a 10,000 US dollar trade size. In other words, a mini lot of 0.10, okay, 1/10 of a full lot. I think when you're trading without using leverage, you're setting up a really good principle for yourself, and you're really helping yourself to have a really good bias and a really good outlook for your future trading abilities, particularly for trading larger sums. Okay, so I advocate that. Now, this is the special topic I wanted to make sure I had time for. This was trading into expected interest rate decision. Now, going into this week, I was trading the US dollar NOK pair short, and that's the Norwegian krone. And the reason I was going into this short is because I could see a divergence in central bank policy. But then I added a second position because what I realized is something that I like to do, and I like to trade expected interest rate decisions. Now, this is what was expected. Okay, it was expected for the Norwegian bank to raise their interest rates. Okay, so this was the trade that I took. This is on the 15-minute chart. Okay, so the 15-minute chart, I entered literally just before, on the 15-minute chart, the data came out, and I just had my stop just a little bit above the highs, and then I exited down here for, you know, a good number of points. Okay, it was a very nice trade. It was roughly half. I'd made just under 1% on that trade. Here in the daily chart, this is the daily chart. You can see that I sold on the interest rate decision, and I held into these test of these lows, which is also testing the 100 exponential moving average. For a time, I thought, maybe we can get through these lows, but I'm glad in hindsight that I took profit. It's just a good lesson. Take your profit when you have it. That's my, my order entries: entrance, stop, exit. And my take profit was just about that. So I was near my take profit, so I just took it there and then at the time. Okay. Now, I'll check one thing. When you have an expected interest rate decision, there's a spike. So what I was planning to do was to get out on the spike. So as soon as the interest rate decision happened, here it is. This was the policy rate. This was the March, press conference, the 21st of March, whenever it was. Yeah, it was last week, and they said they decided to raise the policy rate by 0.5 percentage points to 1%. So that's it. And I took the short, and I was expecting to get out straight away. Maybe, just take the equivalent of 20, 30 points. So it's difficult on this pair because it's like, hundreds of points. But I held, and I held for a very good reason, because I read the rate statement. And when you read the rate statement, you can see what they've said. Look, our current assessment of the outlook and balance of risks suggests that the policy rate will most likely be increased further in the course of the next half of year. So in other words, it's saying we are increasing our interest rate and we may be doing more. And as soon as I saw that, I held my position because I thought, hang on, this is great. They're holding more, and I was non-leveraged into this position. And I was considering adding one leverage position. I didn't in the end, but that was it. I had two positions, and I took both of them off down at those lows. So remember that. Look for an expected interest rate. You get a spike on the news. Now, the time to enter it is just before. You don't want to necessarily enter like a week before or 2 weeks before. Sometimes you can, sometimes you can't. It comes down to skill, but you can literally enter just before the event. Obviously, you have to remember you could be stopped out. There could be a surprise, so you have to have your stop. And I'd have a stop, or have a stop and an alternative orders to go long. So say they decided we're not going to raise our interest rates. Okay, that would be a really, really, you would have had a completely opposite move. So you have to be aware that you can get caught out. However, if they didn't raise interest rates, then you know that, well, that's an obvious buy. So you can get out, at least make up some of your losses, okay? But that is a key way of trading into expected interest rate decisions. I hope that's clear, guys. I hope you get that. And the final thing as we closing is, don't forget, I do coaching sessions to help you guys. I like doing this. I like to help people. I've got one coming up on Friday. If you've got one-on-one coaching with me, $1,500 deposit into your account, and you get a 1-hour coaching session with me. If you deposit $3,000 into your account, you get a 2-hour session with me. So it's 1 hour session, then a 1 hour follow-up. And the premium, if you deposit $10,000, you get a 2-hour session with me, 1 hour follow-up, and then 1 week's VIP support where I just go through personal trading queries. And of course, don't forget, you also get the these webinars and workshops on the Monday and Tuesday, which are just a good ways of topping up your learning. And I know a number of you guys have been here for quite some time, and you know you're going to be picking up stuff, and you're going to be doing great on your own as well. So that's a really good thing. So don't forget, HYCM's online trading workshop. Free workshop is here each week, 1 o'clock to 2 o'clock GMT. I'm back next week, and of course on Monday I'm back at 12:30 p.m. GMT time on Monday next week, and through to 1 o'clock, and we're looking at the key events ahead. If you want to know what's happening with the New Zealand rate statement coming out tonight, go back and have a look at the webinar on the website. Guys, I hope that's been helpful for you. Thank you very much for attending, and really good to have been with you. And remember, looking out on the pound, we're looking for headlines on the DUP. Okay, that's going to be one of the key movers for the pound. Have a good week, and I hope to see some of you guys on Monday. And yeah, have a good day. Yeah, cheers, Diep. Cheers, Trebivan. That's great. You're very welcome. Have a good one, Diep. And you, Ravi. Yeah, thanks, Nadir. Take care now, guys. Bye.